Economists believe it will be a close call when the Reserve Bank decides on interest rates this week. Some say there are looming risks to inflation, which may lead to the Reserve Bank keeping rates unchanged, while others argue that since the Monetary Policy Committee meeting, the economic backdrop has remained conducive to further monetary easing.
Economic prospects remain weak despite the rebound from a technical recession in the second quarter. Economists say there's a possibility of further weakness in the quarters ahead. GDP growth for this year is expected to be at 0.5%. Economist Elise Kruger believes the Reserve Bank may have to reverse its downward revision of the consumer inflation outlook.
The MPC did indicate that they're going to be data dependent in the next while, and if you look at the data that came out since the previous MPC meeting, we noted the sharp increase in the oil price, slightly weaker rand exchange rate, and then also very important in the fuel price impact on the CPI forecast curve. So we do think they need to up their forecast and almost wipe out the downward revision of the previous MPC meeting, which is one reason why we think they could perhaps rather keep rates unchanged. Also, another factor is the electricity price hike in 2018, of which we have a good indication in terms of the application of Eskom sitting at 27.5%. If that would come through, it will be a severe knock for inflation in the second half of next year. And as the MPC is forward looking, not saying they're going to get the whole increase, but even if it's half, it's still double what the SARB has at this moment assumed in their models.
Stats SA will release the consumer inflation figures tomorrow. Food price disinflation is expected to continue as the effects of the drought continue to dissipate.
We forecast a figure of 5%, an annual change in CPI, up from the 4.6% in July. Basically partly driven by a low base of calculation, but also an increase in fuel prices that we saw in August. We believe that the 4.6% will be the lower turning point of the CPI cycle, and that from here onwards, CPI numbers will be slightly above 5% for most of the next 12 months.
The high possibility of electricity tariff increases, increasing oil prices, and the weaker rand are the main risks to inflation going forward. SABC News, Johannesburg.